Precious metals held onto yesterday's steep gains in London Trade Wednesday, with gold prices trading at one-week highs above $3,300 per troy ounce, while longer-term bond prices fell, and the US yield curve steepened again amid rising inflation and growing concerns over the size of Western governments' debts. Silver tested its highest dollar price of the past 3 weeks at $33.20 per troy ounce, while fellow industrial precious metals, platinum and palladium rose further to new 12-month and 6-month highs, respectively, following news of China seeing its heaviest platinum imports in a year. A narrative shift could take place from positive tariff news to negative budget and fiscal issues, says an analyst at U.S. financial giant Citi, following last week's downgrade of U.S. Treasury debt from risk-free AAA by the Moody's ratings agency. With President Trump's tax-slashing proposals set to raise the U.S. debt ceiling by $4 trillion, that could see another round of sell the U.S., meaning higher back-end yields, lower risk assets, and lower U.S. dollar. The yield demanded by bond market investors to buy 10-year and other longer-term back-end U.S. Treasury debt has now risen above the yield on both 3-month bills and 2-year bonds, part of a bear steepening in which the yield curve has steepened amid a drop in both long and short-term debt prices. Each of the last 4 recessions in the world's largest economy have been immediately preceded by both the 10/2 and 10/3-month yield curves steepening sharply from inverted to positive. The clearest way in which debt and deficit uncertainties have manifested themselves is through a steeper U.S. Treasury yield curve, says a fixed income manager at J.P. Morgan Asset Management. Washington's 10-year borrowing costs today tested their highest in 3 months as Treasury prices fell for a second session running. Borrowing costs for the government of world number 4 economy Japan, meantime, jumped again today, hitting fresh all-time highs on 30-year Japanese government bonds above 3.18% per annum, after Tuesday's auction of new 20-year JGBs found the weakest demand since 2012. Japan's Prime Minister Shigeru Ishiba today staked his job on a pledge to cut rice prices after the daily staple doubled in 12 months. Please like this video and subscribe to our channel.